Hi there, and welcome to another exciting session of learning provided by Quicksoft. You can contact us for any training needs or doubts you have by sending your email at contact@quicksoft.com. In today's session, we are going to cover Oracle Fusion Reporting Currency. Before we see how it is configured in Oracle Fusion, let me walk you through Oracle documentation, which very clearly states what is the purpose and the usage of reporting currency. Okay, let's start. Okay, so let's walk through the standard documentation of Oracle to understand this concept very clearly. Single ledger. When do you need a single ledger? If your subsidiaries all share the same ledger with the parent company, or they share the same chart of accounts and calendar, and all reside on the same application instance, you can consolidate financial results in Oracle Fusion General Ledger in a single ledger. Use Oracle Fusion reporting functionality to produce individual entity reporting by balance segments. General Ledger has 3 balancing segments now that can be combined to provide detailed reporting for each legal entity and then rolled up to provide consolidated financial statements. Now let me walk you through the definition of multiple ledgers. After this single and multiple ledger definition, I will show you an actual example so you get better clarity. Accounting operations using multiple ledger can include single or multiple application instances. You need multiple ledger if one of the following is true. You have companies that require different account structures to record information about transaction and balances. For example, one company may require a 6-segment account structure while another company needs only 3-segment account structure. You have companies that use different accounting calendars. For example, although companies may share fiscal year calendars, your retail operations require a weekly calendar and a monthly calendar is required for your corporate headquarters. You have companies that require different functional currencies. Consider the business activities and reporting requirements of each company. If you must present financial statements in another country and currency, consider the accounting principle to which you must adhere. Now let me show you a simple example so you get better clarity of how it works. In this example, I have 2 chart of account structures, structure A and structure B. Structure A has 6 segments: company, cost center, account, project, intercompany and future segment. Structure B has company, cost center, account, project, and they have additional segment called product, intercompany and future. And have 2 calendars, one Jan to December, second is April to March. In single ledger example, I have 4 countries. They all use same chart of account structure, which is structure A, same currency and same calendar. In this example, actually we can maintain just one single ledger, provided they are all in the same application instance. When do you need multiple ledgers? In this example, you notice Singapore and Malaysia, they are sharing same chart of account structure, but Thailand and Vietnam are sharing a different chart of account structure, even though currency is same, calendar is same. So we would require 2 different ledger at least, one for Singapore and Malaysia and second for Thailand and Vietnam, because the chart of account structure is different. Another scenario could be they all share same chart of account structure, but the currency they are using their own local currencies because they need to report in the local currencies, but the calendar is same. In this case, we would require 4 different ledgers. In the last example, we have chart of account same, currency is same, but Singapore and Thailand have same calendar, Malaysia and Vietnam have same calendar. So in this case, Singapore and Thailand can actually reside on the same ledger, and Malaysia and Vietnam can be on the same ledger. So I hope with this simple example you got better understanding of when you should define single ledger and when you should define multiple ledger. Yeah, these are the famous 3C to consider when you want to decide whether you should have single ledger or multiple ledger. There's another thing which is a sub-ledger accounting method, but to keep it simple, we'll just focus on the 3C in this example. I hope with the definition and the examples I shared, you get a better picture of when you should have a single and when you should have a multiple ledger. Sub-ledger we don't need to consider at this point, we'll discuss that later. Key points which you should consider when deciding about the ledgers. Companies account for themselves in primary ledgers, and if necessary secondary ledgers and reporting currencies. Your transactions from sub-ledgers are posted to primary ledger and possibly secondary ledger or reporting currencies. If you have defined secondary ledgers or reporting currencies, when you post a journal in primary ledger, transactions will be automatically converted and posted in your secondary ledger and reporting currencies. Local and corporate compliance can be achieved through an optional secondary ledger, providing an alternate accounting method, or in some cases different chart of accounts. Later we'll be discussing when you should have a secondary ledger or when you should have a reporting currency. You will get better clarity of that. Your subsidiaries primary and secondary ledgers can be both maintained in your local currency, and you can convert your local currency to your parent ledger currency to report your consolidated financial results using reporting currency or translation. You get better clarity of when to use reporting currency and when to use translation at later stage. So what is the primary ledger? A primary ledger is the main record keeper ledger. Like any other ledger, a primary ledger records transactional balances by using a chart of accounts with a consistent calendar and currency and accounting rules implemented in the accounting method. The primary ledger is closely associated with the subledger transactions and provides context and accounting for them. In the example which I shared with you, we are talking about how many primary ledger you should have. In this case, we can have maybe just one primary ledger. In this case, we may have two. In this example, we will require 4 different primary ledger because currency is different. In this case, we may still have one for Singapore and Malaysia, and Singapore and Thailand, and another for Malaysia and Thailand, Vietnam. So depending upon your business need, you will decide how many primary ledger you should be having. To elaborate it further, to determine the number of primary ledgers, your enterprise structure analysis must begin with your financial, legal and managerial reporting requirement. You should carefully consider what are your financial, legal and reporting management requirement before you decide how many primary ledgers you should define. For example, if your company has separate subsidiaries in several countries worldwide, enabling reporting for each country's local authorities by creating multiple primary ledgers that represent each country with the local currency, chart of account, calendar and accounting method, which is very true in this example. We have 4 different countries where we have operations, and each country has a local currency requirement which allows us now to define different ledgers for different countries. And once we have different ledgers in the local currencies, they will be very able to generate all local reporting requirement. Local reporting regulation needs will be met by using the same currency as per the local currency. Use reporting currencies linked to your country's specific primary ledgers. So you understand, reporting currency is actually connected to your primary ledger to report your parent company for your foreign subsidiaries. Other considerations such as corporate year-end, ownership percentage and all these regulations will also influence your decision to have how many primary ledgers. Now let's cover the secondary ledgers. A secondary ledger is an optional ledger. If you want to use Oracle application, you must have at least one primary ledger. But secondary ledger is an optional ledger which is linked to primary ledger for the purpose of tracking alternative accounting. A secondary ledger can differ from its primary ledger by using a different accounting method, chart of account, accounting calendar, currency or processing option. So secondary ledger can have all totally different chart of account, currency, calendar, doesn't matter accounting method, but you can still account for data as per the need of secondary ledger. All or some of the journal entries processed in the primary ledger are transferred to the secondary ledger based on your configuration option. There's always a need not to push all the journals from primary ledger to secondary ledger. For example, revaluation journal, which we only do independently in each ledger. So we set up in the system that which journal will be automatically pushed to secondary ledger and which journal will not be. The transfers are completed based on the conversion level selected. There are 4 different conversion levels. Balance. Only Oracle Fusion General Ledger balances are transferred to the secondary ledger. If I choose this option, then system will only convert the balances from primary ledger and into the secondary ledger for balances level reporting. Another option is journal. If I choose this option, general ledger, when I post a journal in the primary ledger, the same journal will be automatically posted to the secondary ledger. Subledger. If I choose this option, then all the journals of subledger will be posted to secondary ledger along with any manual journal which I post in the GL. Adjustment only. This is basically an incomplete accounting representation and which only holds adjustments. Yeah. Secondary ledger provide many benefits, but they produce large volume of additional journal entry and balances data, resulting in additional performance and memory costs. You must remember, once you define a secondary ledger, depending upon the option you choose, you are going to create duplication of data. Yeah. When adding a secondary ledger, consider your needs for secondary ledger for reporting currencies and select the least costly data conversion level that meets your requirement. Yeah. When you say least costly, that means you should look at your requirement. Yeah. It's not always you choose, okay, I choose subledger, but you may not have any need to define at subledger level. Yeah. So you have to choose what is the business need. Is it a local legal requirement which you have to follow, or is it a reporting requirement to your subsidiary company? What is the purpose of your defining a secondary ledger? For secondary ledger, the least costly level is adjustment data conversion level because it produces the smallest amount of additional data. As mentioned here, adjustment will only push adjustment to secondary ledger because in some business case scenario, we may have only need to push adjustment. We don't want to duplicate everything, and then we can combine these two ledger data and generate reports as needed. The balances data conversion level also is least relatively inexpensive because we are only moving balances. We are not creating detailed journal. For example, if I have a journal entry for 1000 lines, if I have a journal for 1000 lines, if I push the 1000 lines to GL, I'm creating a lot of data in GL tables. But if I'm only moving the balance, then I'm only updating the balances table. Yeah, so it's relatively inexpensive. Depending upon how often the balances are transferred from primary to secondary ledger. Again, how often do you transfer the data is also a key consideration. The journal and subledger data conversion levels are much more expensive. As you can notice, if I do anything journal level or subledger level, the amount of data which needs to be transferred is a lot. That's why it's a very expensive option which you should always consider before you want to use that option. Though adjustment only option is inexpensive, and but not many people use it. Let me share with you this example from this documentation. For example, you maintain a secondary ledger for your IFRS accounting standard while your primary ledger is in US GAAP. So that accounting principles are different. So because you need to report due to various reasons in IFRS, but your primary ledger is in US GAAP. So you decided to select subledger level for your IFRS secondary ledger. However, since most of the accounting is identical between US GAAP and IFRS, a better solution is to use adjustment only level for your secondary ledger. The secondary subledger level requires duplication of most subledger journal entries and general ledger entries plus the balances. With the adjustment only level, your secondary ledger contains only the adjustment journal entries and balances necessary to convert your US GAAP to IFRS accounting, which uses only a fraction of resources that are required by full subledger level secondary ledger. So in this example, they have very easily showed that if you want to convert in this example, for example, from different accounting regime to different accounting regime, if you find that 95% of journals will be very similar, then you just need to post the adjustment entries in the secondary ledger and then combine the data from these two ledgers to generate your reports in a different accounting regime. Hope you got a good understanding of what secondary ledgers are. Now let's cover another interesting ledger called reporting currencies. Reporting currencies maintain and report accounting transactions in additional currencies. Each primary and secondary ledger is defined with a ledger currency that is used to record your business transactions and accounting data for that ledger. It is advisable to maintain the ledger in the currency in which the majority of your transactions are denominated. Every primary ledger will have its own functional currency, and your functional currency should be the one in which you do your majority transaction. Let's say, for example, in Thailand, somebody defining a ledger in US dollar, but their business is 80 to 90% is done in Thai baht. So I think in that case it's advisable to have functional currency at Thai baht so that you don't have to hit the exchange rate gain loss for every transaction. For example, create, record and close the transaction in the same currency to save processing and reconciliation time. Compliance such as paying local transaction taxes is also easier when using local currency. Many countries require that your accounting records be kept in their national currency. This this is again a legal requirement. If that is the requirement, then you have no choice but to maintain in that local currency. Very similar to secondary, if you need to maintain a reporting accounting records in different currencies, you do this by defining one or more reporting currencies for the ledger. Notice the point one or more. You can actually define multiple reporting currency ledger. For example, my primary ledger could be in US dollar. I may define reporting ledger in euro or in INR or any other currency. I can have multiple reporting currency ledgers linked to my primary ledger. So when a transaction is posted in primary ledger, it will automatically translate into the multiple reporting currency which I have defined and linked with the primary ledger. Similar to secondary ledgers, there are 3 conversion levels for reporting currencies: balance, journal, and subledger. These are the same thing as shared in the secondary ledger earlier. You should use a very similar guideline for reporting currency, although you should use the least expensive option as practical. If the business need is to have detailed transaction, then you have no choice but to use subledger. Now this point is very important, which you should always pay very good attention to. Do not use journal or subledger level reporting currencies if your organization has only infrequent need to translate your financial statements to your parent company's currency for consolidation purposes. If your only need you have is, for example, your currency is Thai baht, but your parent company is doing business in US dollar, and the only need of a parent company is that you send them monthly trial balance translated in the US dollar, then you don't need to define all this at journal level and subledger level. Standard translation functionality meets this need. Consider using journal or subledger level reporting currency when any of the following conditions exist. You operate in a country whose unstable currency makes it unsuitable for managing your business. As a consequence, you need to manage your business in a more stable currency while retaining the ability to report in an unstable local currency. Or you operate in a country that is part of the EMU and you choose to account and report in both the European Union currency and also national currency unit. Though second option is very rare, not used nowadays. The whole purpose of explaining this to you is that if you have to carefully evaluate your business need, if you just need a representation in a different currency from balance perspective, standard translation which is available as part of standard functionality can do that for you. You don't need to do all this reporting currency, standard ledger or the secondary ledger and all that. But if you really need, depending on business need, then you can define either secondary ledger or your reporting currency ledger. I believe with this explanation you can now got better appreciation when how many primary ledgers you should define and when do you need a secondary ledger, when do you need a reporting currency, or when actually you can do translation. The actual setup in the system for report, in this video I'm going to cover reporting currencies. The actual setup in the system is very simple and you will find it very fast. The more time I spent on this explanation, because this is very good to understand. Once you have better appreciation of all this documentation, then when you do use the system, you can understand things very easily. Now let me show you all the steps required to create a reporting currency ledger in the system. Now let me show you how it is done in the system. So I go to my implementation project, setup and maintenance, manage implementation projects. This is my project. I search for ledgers. And I go to manage primary ledgers, and then I go to manage reporting currencies. Important point to note is, if you open this define secondary ledgers, it also has manage reporting currency, but that's not where we want to go now, because when you attach a secondary ledger to a primary ledger, your secondary ledger can also have a reporting currency. So if you go through this option, it will ask you to choose primary ledger and secondary ledger against which you want to create reporting currency. But in our example, we are just doing a reporting currency for primary ledger. So I go from here, source ledger, Singapore ledger, chart of account same, currency is Singapore dollar, accounting calendar and standard accrual. Remember the rule for reporting currency, your chart of account and calendar should be same, only currency can be different. Yeah, currently I have defined one reporting currency which is US dollar. I will add one more. As I mentioned in my scenarios earlier, we can have as many reporting currencies you want, but the thing to remember is the more you have, the more load of data and memory on your system. So maybe I will define one for INR. You can choose to do it balance level, journal level or subledger level. Let me give subledger, currency INR, first period open, let me give August 18. So everything we can leave as it is. For do you need general approval? Let's leave it as it is. Corporate, everything else we can leave as it is. Yeah, so the only thing I have defined a name, description, conversion level, what do you want, balance journal, subledger level, currency, what is the first open period. If any rounding difference account, you can actually give a rounding account. So if any difference while doing rounding to that currency, where the difference should be posted. I have given this rounding account here. Revaluation basis, primary ledger currency or the entered currency. Yeah. So by default, I think it's good to choose entered currency. So the revaluation is the process which will be done individually in each book. Primary ledger will have to do its own revaluation and secondary ledger will have to do its own revaluation. And revaluation journals will not be posted from primary ledger to the reporting currency. Yeah. Remember the difference between primary ledger and reporting ledger is what? Currency. INR is a functional currency for reporting currency. But my primary book is Singapore dollars. So in Singapore dollar, INR is a foreign currency. I will do revaluation for INR. Whereas in reporting currency, USD is a foreign currency. So for USD, I will do revaluation, but not for INR. So that's why revaluation journals are not posted across. Yeah. Revaluation process is done independently in each ledger. Some standard setup, if the rate is missing, what to do, report error. Retain journal creator from source ledger. If you want the original creator name to appear there, you should choose yes. Journal conversion rules. Yeah. So other yes, which means all the journal will be converted. Closing journal is the one which actually is posted by the system automatically to post the retained earning balance. Yeah, for that journal we don't want it to be posted transferred from main book to a reporting book. That will be posted independently in the reporting book by the process system itself. Yeah, you can also add revaluation here if you don't want revaluation journal to be posted. Revaluation, source category, I think category will be revaluation, and I don't want this journal to be posted. Yeah, so this facility is available to you, so you can choose which journal will be posted, which journal will not be posted. Yeah, data conversion. If you are creating your subledger reporting currency in the middle of the year, you can actually migrate balances from your primary book to the second reporting book by using this data conversion process. Oracle has this process available, but if you're doing actually during the beginning of the year, you can create trial balance journal as in the last period of the previous financial year, which will automatically create the opening balance journal in the reporting book also. Yeah, this is more for data conversion. For sequencing, you can choose which sequencing to use by ledger, and you can pick all these options as necessary. Once you're done, it's very simple and basic setup. Then your reporting currency setup is complete. You can just save and close. One important thing to remember, now when we post the journals, system will try to convert this journal automatically to your reporting book. What is important to have in the system for for the conversion to be successful is the exchange rate from the entered currency to this functional currency of your book. So make sure you have all the exchange rate defined in your report for your reporting books also. Okay, for simplicity, maybe I will just choose journal in this example. Yeah, and I change this to August 18 and I save and close. My reporting book is defined and it is active. Yeah, so now two reporting books are there, so whenever any transaction happens, these both reporting books will be updated. Click on save and close. Before I do anything, I need to maintain the exchange rate, so I maintain the exchange rate from SGD to INR, conversion rate corporate, from date conversion rate will be, let's say 45, and let's say insert. My data has been loaded successfully. Let me go to system and inquire. SGD to INR, date, I'm looking at, let's say today's date, exchange rate type corporate, I search, exchange rate is available. Now I can actually post a journal in my primary book and you will see what happens in my reporting book. But another important step I have to do, I have to give access to the system to this reporting book. Because reporting book, in all due respect, is also an independent ledger. Even though conversion will happen, but if I want to see the journal, I will not be able to see unless I have data access to that particular ledger. I have access to these, but don't have access to INR, so I will just go to action and say create. Same username. I choose the responsibility. I choose the security context, and I will choose INR. Where's my reporting book? What is the name? I think INR. INR reporting currency. I click on save and close. Click on done. Now I am ready to go and post a journal in my primary book and see what happens in my reporting book. Click on done. Go to your home page. Journal ledger responsibility. Journals. Okay, choose the data access set. I'll choose Singapore book. And then I will go to create journal, test INR version. Okay, everything same. I don't do anything else. I just go to category addition. Okay, wrongly spelled. I correct it. Addition. I go to my account. I'll just choose any dummy account just to show you how translation happens. Please do not worry about account code I choose. It's only to show you the demo how it works. Okay, it's 41,000. and I do line 2, 1000. Done. I save my journal. Journal saved. I complete it and post it. For this book I have enabled journal approval, so my journal will not be posted. I have to approve the journal first. So I go to my alerts and say okay, there's a journal batch requiring approval. So open this alert. I defined myself as an approver, so I should be able to approve these journals. So I see the journal, I can click on approve. Okay, now this journal has been approved. I inquire the journal again. I should be able to post it now. Manage journals. Accounting period August 18. Search. I just created the one unposted here. Now this one. I search for unposted journal, so my list is restricted. That's not the one. I inquire the journal and we see there's a message here. Let me see what's the message. The accounting period August 18 is not open for reporting books. Now see, as I mentioned, reporting book is also an independent book. When you try to post the journal there, it find the reporting book period is not open. Let me just duplicate this tab and open the period first. I go to my general accounting, period close. Okay, so I'm looking for my INR reporting currency, period August 18, never opened. Open first period, okay. Okay, process has been submitted. I inquire for my book again. August 18 period is open. Now I should be able to proceed. I click on post. The process has been submitted. Okay, now journal has been posted, but you notice I created one journal, but there are 3 journals which have been posted. Let's see what happened. This is my original journal. This is in book Singapore. Posted $1,000 entry. Now I cancel this. I open second one. This is in my reporting book where it has been converted to INR using the rate which I defined. The last one should be for my dollar book. Yeah, this is converted to US dollar. Yeah, so you notice when I create one journal, which was this original journal, but system automatically created my reporting currency journal, and once I posted this, those were also posted. Yeah, this is my original journal. Okay, so I hope through this process you got a good understanding of what different reporting currencies you can use, when to use reporting currency, when to use secondary ledger, and how many primary ledger you should be defining. Thank you very much for joining for the session today. In today's session we went through the Oracle documentation on primary ledgers, secondary ledger and reporting currency ledgers. I hope you guys have good understanding of when to define what kind of ledger and how many ledger you should be defining in your different business scenarios. In today's session we only covered reporting currency. In my next video I'm going to cover secondary ledger. So till then, keep enjoying, keep learning, and if you have any question where you need help or you want any specific video which I should create, please drop a note at contact@quicksoft.com. Thank you very much and happy learning. And don't forget to subscribe to my channel so that you can get notification for all future videos automatically. Thank you.